Hello folks, this is ICT with the Pro Traders Club entry for November 22nd, 2011. We're going to go over the cable trade that I took in the London Open and in New York Open sessions. Alright, we're looking at a daily chart, and for those that were unable to participate in the webinar last night, I'm not going to go over the entire breakdown and analysis of the weekly, daily, 4-hour. I'm just going to go directly to the 1-hour chart. You can catch all of that analysis on the video once it's posted. So we were basically going over key support and resistance levels noted on a 1-hour time frame. To me, I believe that if you spend more time on this time frame for your setups to form, you're going to get a lot less trades, and that's fine. That's not a bad thing. That's a good thing. But you'll get more choice setups. In other words, the ranges and the swings that materialize on this time frame are much more trader friendly in terms of the amount of pips that each swing provides in terms of potential move. So by delineating where key support and resistance levels are, obviously this one here and this one here, you can see how the high was respecting this old low here. Well, in the webinar we were talking about this low here and how price was trading in this small little consolidation, and price was basically looking like that when we were discussing the whole market in general and where price should go. And I suggested that this low was going to provide a catalyst to push price back up into this high right in London Open, and then we would look for a short. Well, there's your push up into London Open. Now what we're going to do is I'm going to highlight this little area here, so that way when I drill down to a 5-minute chart, you'll know what I'm looking at in terms of price. It'll be the same price region right here. Okay, so now when I zero down to a 5-minute chart, we can clearly see that this is the area that we were looking to zoom in on. Okay, so we have price running right up into the 156.90 level. Let's drop that on the 90 level because that's what that low was on the higher time frame, which would now provide a resistance level. Old support broken is now going to be resistance, or we should anticipate it as resistance. If you look at the kill zone, we have price trading right up into our anticipated killing ground. Okay, so the killing ground is basically the area or location in terms of price level that a setup should form, and we have that occurring at the same time a kill zone, which is based on time. Okay, so you have the confluence of time and price theory coming together, and based on a higher time frame analysis, we've been moving lower. Just look at your daily chart. Cable has been driving lower. So we have to have more emphasis placed on looking for shorts than just looking for buys. Okay, I did call the move to trade higher when we were trading in this consolidation area. So if you wanted to get long, looking for a buy to get up into this region, I guess you could do that. I just don't, because this is the setup that you really want to be waiting for and sitting on your hands. All right, now several ways you could utilize this potential trade. One was when my price made this high here and sold off. Well, we were expecting price to trade up into this level, right, based on higher time frame support and resistance levels. You could use this as a turtle soup false breakout. Okay, so in other words, as price traded right above this high, you could have your limit order that goes short, You could have a limit order to sell short right at the level 156.90, or you can use the standard 156.80 institutional level like I did. That was my entry pattern for our entry price to get into the short here. Obviously, price quickly snapped lower, found some support in this region here, and then quickly bounced up. That's why you have to take some profits off the table. Okay, and I was tweeting where price was trading down, and I was anticipating it to really just slip below here. But now you see, if you go on Twitter, you'll see that I was calling for it to slide below this low here and try to run the 156.20 stops out. But price felt it necessary to trade up into New York Open, a lot more aggressive than I was anticipating. But that's why you take some profits off take some profits out of the trade, fund your trade, and that way, even if it was to continue up higher here and blow out this high, you could have made money and been happy with the fact that you still made money being wrong. But as it unfolded, you can see how we're using this high made in London Open down to this low here. This should be no surprise to you. Optimal trade entry forming for the so you can see how price ran up into another opportunity to get a retest of 156.80 institutional level. Okay, so you could have got short here, and now price slides lower. And the question of the day was, how did I know the level 155.84 was a limit order to cover short on one of my accounts today? I was in all three of my accounts today with the cable, and I scalped a few out of it with the GFT account. I swing traded the position from here, scaled off 50 pips here, and as it drove down, and then went re-shorted again at 56.75 and ran down here and used the 155.84 limit order. So how did I get this price level and advance it, like as we were trading up in this region here? How did I know that? Well, let's go back to a 1 hour chart. And I'm going to take everything off, clean it up real quick, and I'm going to drop in the Trinity. Okay, so we have price trading below the outer oversold condition. Okay, this being last week's or previous week's low. I've already taught how if you take the fib, pull it from the lowest up to the highest region on your matrix. All right, your extension levels in here, this is what you're going to be utilizing to try to find price levels to take profits. So by pulling the fib from the low up to the high, using our extension levels, this was the region to anticipate a low forming. And let's go down to a 15-minute chart. Might be a little bit clearer by using that time frame. So here's that low on the matrix on the Trader's Trinity, lowest region, and this is the fib I pulled up. Let me show it to you real quick. Squish it down. There's the range, pulling the fib up to it using the extension levels. So we have price trading down from the short at 156.90, so support turn resistance, trades right down into this level here. Okay, the extension on this is okay, 155.83. All right. So basically, what is that telling me? I'm going to round it to what level? 155.80 institutional level. Okay. The actual low for this data feed registers at 155.81. All right. So now as a trader, how do we use this information? Well, since I'm rounding it to the institutional 155.80 level, round number, and I want to cover a short, and if the price level I'm expecting to see traded to is at a round number 80 and price is coming down, I got to factor in whatever that spread is for that particular pair. And that's what I did here. I utilized the standard 4 pip spread that most platforms and retail traders see for cable, and I added it to 80. So what does that give you? 155.84, and voila, you see price immediately trade off of that and back into the range. Okay, why did I use 162 extension? Why didn't I use this one here? Well, simply because what week are we trading in? We're trading in the week that North American traders observe Thanksgiving. That was the time frame we were trading in, and I didn't feel that we would have a large continuation once we broke down, and I expected price to go back into a range and consolidate, and you can pretty much see that's what we've done today so far. And I'm flat for the rest of the week. I'm going to observe Thanksgiving holiday with my family, and I hope that you guys do the same thing in North America if you do celebrate Thanksgiving. And if you don't celebrate Thanksgiving, you know, any day's a good day to give thanks. So that was basically how I called the absolute high and low of this price swing from London Open and New York Open down to the very low of the day. So hopefully that was a real-time example from last night's information, tweeting it and giving you the tools. Didn't have to introduce anything new. This is how you break the market down, and you don't use any indicators. It's pure price action, pure support and resistance levels. Maybe it's a little tweak here and there on how I apply the concepts, but the bottom line is it's still based on support and resistance levels. Now, if you real quick, let's throw this in here. I know you guys like to have your pivots on, and you can see how price trades back up into central pivot. So we had confluence of central pivot, previous week's low, key resistance level based on higher time frame support broken, now traded back up to as resistance. Then we have an optimal trade entry going right up to the central pivot again, and obviously overall downtrend or down market flow in higher time frame. So obviously you should be trying to scope out potential shorts for the highest probability setups. And you can see anytime that we did bounce, with the exception of the run up into London Open, which is to fake out the setup. Remember I was teaching that every rally up is anchored, okay, to an eventual swing lower. And without going into all that, basically the momentum was more on the downside, obviously, than it was on the upside. So with that, I wish you guys good luck and good trading.